announcement last week that, and it was a little controversial, about the Trump banning the institutional investors from buying additional single-family homes. And obviously, that we've really got our finger on the pulse of what's going on there and want to stay abreast of that. Kind of talk a little bit about that, Brian, and again, where you see impact in our particular space.
Sure. I think if you go back to basically the end of the GFC, or as we emerged, right, I think one of the biggest catalysts to help get things moving again in housing was institutional investors coming in, buying large amounts of properties and being able to securitize them in this SFR product, right, or single family rental. And I think that space has become a good participation, provided more bonds for people to buy and stuff. It still hasn't been extremely large, right? It's the home ownership by institutions about 1% of the housing stock. And
That's
so
what it is 1%.
Yeah, right.
Okay.
Believe it or not, right? And it's funny because I think that as far as headlines and people saying that that's why homes aren't affordable because you're fighting against these large institutions buying it and stuff like that. There's certainly pockets and a lot of areas that you hear about in headlines that were affected by that because they're all chasing homes in the same places. But if you think about it, kind of again on the broader basis, it's probably not going to affect things too dramatically. The question of whether the administration should get involved in something like that and stop large investors from doing it, I mean, I think that could probably signal a lot. And I think it also goes along with the idea that the administration wants to address things like, quote, affordability and housing and how to make those things better. So I think it's certainly a good signaling thing. I think that as far as its impact in the market and on the securitizations that are outstanding and that sort of thing, I think it's going to help. I was going to say it's going to help a lot, but I should say more that it's going to be more supportive, right? Because those outstanding securitizations now are going to have kind of a more like a rarity to them, right? And so if you think about things that are issued and they're performing well, and then they're no longer issued, then ostensibly they could be more in demand after that. And so I can see two sides to that argument. So I guess I don't think it's going to be really pronounced either way. But net, I would still say that it's going to be better for things like the current bonds that are outstanding in that space. And I think on a flow-through basis, that'll still probably help trading in our kind of non-agency space overall.
Yeah. Well, the other thing is that it is a midterm year, and so I'm sure that's top of mind with the administration. So
actually, on that note too, I'll just kind of chime in a little. I think that anything that they could do as far as addressing things like fraud or broader waste in spending, right? I think those things will trickle through to the Treasury market, right? And to the idea of America's balance sheet and credit rating, so to speak, and all that stuff. So I think that anything that can kind of help address getting broader rates lower or Treasury rates lower, or having our fiscal house in order, which brings overall rates lower, and then of course you got the Fed funds issue and how the Fed is going. But that whole idea of broader rates lower, that will certainly help housing, right? If broader rates are lower. So, you could kind of couple all these things together with the things they're trying to do, on these other issues like fraud and stuff like that. But if they can get overall rates lower, that's going to help everything.